Good morning from Chicago traders. It is 8:01 a.m. Central Time on Wednesday, October 22nd, 2014. Wow, there's a lot of news coming through. 2014, derivatives trading involves substantial risk of loss. It is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. I want to start off with a little announcement, something that's been in the works for a bit. I was invited by Eurex. I think it's probably the second largest futures exchange globally, based out of Frankfurt, Germany. It's the home of the Bund, Babel, Schatz, the Euro Stocks, DAX, SMI, and a whole bunch of other products. It is Eurex is where I really made the turn in trading futures as a prop trader. But we were approached by them, and I was asked to be a keynote speaker for an event they're a part of in Mumbai, India. And then I was also asked to provide some training support for several shops that they associate with in India, in Mumbai and New Delhi. I'll be traveling to India on November 7th, and I'll be returning November 22nd. So during that period, my presence will be sporadic. I believe the week of November 10th, I will be able to come on, I think maybe every other day, and do a trader bite here and there, and just to keep myself close to the market. The week after that, I will not be able to do that. So I just want to give you a heads up. I'm not disappearing. This is simply an opportunity to it's an honor actually to be invited by such a large exchange to be a keynote speaker and to provide some training support. As you know, my background is in prop trading and training. Ran a prop shop and back traders and so on. So we're gonna put that experience to some good use with some of Eurex's important customers. Back to the markets. Today, the news really, the key elements here are circle around the Eurozone again. At least 11 banks from 6 countries failed the ECB stress tests. ECB declines to comment. Any conclusions before October 26th would be highly speculative, according to them. This is an important one. This is somewhat similar to what we saw here in the U.S. in 2009 and 10 on those stress tests. Europe's just struggling to get out of this trouble spot. The Bank of England had a 7-2 vote for the rate decision to be unchanged. All 9 members think QE should remain unchanged. Whale and McCafferty voted for a hike in interest rates. They're the two who went against the rest. The British pound underperformed in the FX market after dovish comments in the October BOE minutes. Also, Yahoo announced yesterday earnings of 52 cents versus 30 cents. Let's see. Revenues of 1.09 billion versus 1.05. It was up 3% after hours. This morning at 7:30 Central, about 35 minutes ago, September CPI month-on-month came in at 0.1% versus 0.0% expected. Ex food and energy, we have 0.1 versus 0.1. So that looks pretty good. The market's reaction to that was fairly muted. Was here. Let's see. Was fairly muted. Just a small flutter, not much there. As far as what's on deck for today, we've been through the 7:30 numbers. At 9 Central, we have Bank of Canada rate decision and their monetary policy report at 9 Central. Probably not going to affect us. At 9:30, we have crude oil inventories expecting 3 million barrels. Gasoline inventory is expecting negative 1.45 million, and distillate inventory is expecting negative 1.5 million. Refinery utilization at negative 0.25%. 10:30, a number that I have not seen before, the Cleveland Fed CPI. Would consider that to be a low tier number. And as far as speakers, 9 o'clock, Bank of Portugal's Vice Governor, 10:15, Bank of Canada's Poloz and Wilkins on a press conference at 11:15, ECB's Lind. At 2 o'clock, Bank of England's Whale. I don't know how you pronounce that name. It was the Hawk, who was one of the two members that voted for a rate hike. At 2:30, Bank of Canada's Poloz again. And then at 2:30, also Federal Reserve Board of Governors hold an open meeting. And then at 4 Central, a Reserve Bank of Australia's Governor Stevens speech at Payments Conference. Seems like a lot of fluff to me. Nothing truly significant. Let's look at what we've got. First, I want to kind of throw you into something that's unfamiliar here a little bit on the Trader Byte. I want to look at the 10-year note. Look at this chart. This is our the U.S. 10-year note futures December contract. Very interesting move last Wednesday's, as we saw across the board, and has been moving away and moving down until this morning. It's been fairly balanced trading, except for just a few minutes ago, about 10 minutes ago, the 10-year notes just took a nice quick splash down, and we're seeing that on pretty decent volume. So this is a pit session only, and the volume, you can see the volume here spiking pretty good. This is a very important move, I think, for the next couple of sessions that just happened. Coincidentally, I've been monitoring the Bund 10-year ratio. This chart is maybe hard to understand, but this chart is essentially plotting the German Bund and dividing the price of the Bund by the price of the 10-year note. Why do we care? Those may be unrelated products, but they're not. The Bund is also a 10-year product, and I'm looking at basically where the money flow is in between treasuries in the U.S. and Europe, which is basically which are the only two places that have quality, or that have the highest quality notes. And so what we've seen is the Bund's strength pushing all the way up into the last day of the month, last month, and then the 10-year notes relationship with the Bund. As this chart falls, what this means is one of two things: either the Bund's getting weaker against the notes, or the notes are getting stronger against the Bund, and that would cause prices to drop. And last week here on the 14th, last Wednesday, we saw a nice spike down, and this relationship has been steady until now, where it's breaking higher because the notes again are weakening against the Bund. So there's some money moving around between those products, and this chart kind of highlights which direction the spread is moving. I won't get into the details of this. It can get pretty labored and lengthy as far as the discussion is concerned, but it's an interesting look at where money has been flowing. The Bund obviously much stronger than the 10-year coming into the end of September, and then has pulled back and dropped in the last couple weeks, and now it's holding steady back where it normally hangs out, which is in this range. You can see it on the profile. There's a high volume node here, and this is what's considered balanced. So it tested below it and is holding steady in that range. Let's look at what we did yesterday. Start off with the big picture. One of the things I've been monitoring is the 50% pullback from the high of the year to the low we put in at 1813. The expectation is, as long as we hold below 1913, which is the 50% fib, or the mid of this rotation, then this impulsive move down is likely to have another leg, and the expectation was the next leg would likely take us to 1784 before the market stabilizes and finds its way back to 1850. What happened yesterday, though, is it gapped higher. It did not have any interest. It showed very little interest in testing lower and coming back into the 1906 and potentially testing lower into 1899 or so, and it went higher. The trader bite yesterday outlined the better probability is for the market to pull back a little bit on responsive selling, and then to break the 1916.50 overnight high, because it left a weak high overnight, and it did so in an aggressive manner. Yesterday's range was quite large for an up day. We covered 28.5 points on the day session, and that's fairly unusual for an up day. So let's look at yesterday's chart. We gap open at 1910.50. A small responsive test back to 1908. Expected at least, I expected a little bit more, at least to test back to 03 or so, 03, 04. Was not able to do so. Rotates up to 1914.25, balances for a little bit, and then see you later. The OS was taken, retested several times from above, and the market continued higher. And here it is all day long. It just fought the shorts. So yesterday was a short squeeze, very slow. Saw a lot of people get into trouble yesterday, thinking that this is more of a pullback and to put a swing on short. And the market just kept grinding it up and grinding it up and grinding it up, causing those people to kind of get lured into holding positions for a while. Really unrelenting buying, pretty decent strength. We have not seen a delta this high on the close for quite some time. 51,000 positive delta is pretty rare on the buy side. So this really means business. Not only did this break the 50%, it's actually pushed into the next balance area above, right here. And the target, as I'd announced yesterday, targets are 34, 35, and 40. And that's basically where it stopped. The high yesterday, right here at 38.75, just 5 ticks short. And then the overnight session, because of the strength of the close, the overnight session continued higher to 43.75. The expectation today is for a continuation higher. I expect it's opening right on the edge of yesterday's range, and the expectation is for a choppy open, but we're looking for the market to rest a little bit. I'm looking for actually a quick push up, and I expect the responsive selling to bring it back down into the 31 area, potentially taking out the overnight low and testing 30. Overall, the uptrend has resumed. We need to watch this balance zone from the 1st of October to the 9th of October for clues. The template day is the 9th of October. I'm going to leave you with that thought. My throat's actually burning, and I'm having a hard time speaking here. I think I'm just catching a cold, but I'll leave you with that thought. It's important today to watch to see which side is dominant again, where we could teeter. Yesterday's range was pretty high on high volume, so there's conviction there, but it could be extended as well. So the general idea here is that we would have responsive selling back into yesterday's range, but the overall trend in the short term is up, and the market's likely to continue squeezing shorts and forcing them to cover at higher prices on the way up. Again, I'll leave you with that thought. Yesterday, I did a webinar with Big Mike Trading. It was called the basic scalping techniques. I went into the costs of scalping, how to set up properly, and all that stuff. I'm going to post that video today on my website, and I'll link it on Twitter. So if you want to catch that recording, I took a couple of scalps on NinjaTrader, which is not the normal platform that I use. But I wanted to make sure I wanted to use the new S5 trade analyzer for demonstration and to show how that information can be used to manage scalps. I think you'll find it interesting. I'll post the link to that at some point this morning. I'll leave you with that thought. I don't have much more to contribute here. Good luck today and watch your risk. Take care.